Imagine you're an investor, navigating the turbulent waters of global finance, searching for stability and growth opportunities. With markets fluctuating and geopolitical tensions rising, you're on the lookout for a currency that offers both potential returns and a degree of safety. Amid your search, one question surfaces: could the Australian dollar, AUD, be the smart investment you've been looking for? In this video, we'll delve into the Australian dollar as a potential investment. We'll explore its history, the economic factors that drive its value, its performance in times of global uncertainty, and the potential risks and rewards it offers. By the end, we'll circle back to our initial question and determine whether the AUD is truly a worthwhile addition to your investment portfolio. Let's start with the journey of the AUD. To assess whether the Australian dollar is a viable investment, it's crucial to first understand its origins and evolution. The Australian dollar was introduced on February 14, 1966, replacing the Australian pound. Initially pegged to the British pound and later to the US dollar, Australia moved to a fully floating exchange rate in December 1983. This allowed the AUD to be determined by the market, reflecting Australia's economic conditions and its position within the global economy. Australia's economy is often associated with its vast natural resources, making the AUD one of the most traded currencies globally. The Aussie, as it's commonly known, represents not just the Australian economy, but also the fortunes of commodity markets worldwide. This connection between the AUD and global commodities has significant implications for investors. But how exactly does this relationship affect the value of the AUD? And what does it mean for those considering it as an investment? To answer this, we need to take a look on what drives the value of the Australian dollar. The value of the Australian dollar is influenced by several key factors that both strengthen and weaken its position in the global market. 1. Commodity prices. Australia is a major exporter of natural resources, particularly iron ore, coal, gold, and liquefied natural gas (LNG). The demand for these commodities, particularly from major trading partners like China, heavily influences the value of the AUD. When commodity prices are high, the AUD often strengthens. When prices fall, the AUD tends to depreciate. 1. Economic indicators. The strength of the Australian economy plays a significant role in determining the value of the AUD. Key indicators include GDP growth, employment rates, inflation, and trade balances. A robust economy typically leads to a stronger currency, while economic downturns can weaken the AUD. 1. Interest rates. The Reserve Bank of Australia, RBA, sets interest rates that directly impact the AUD. Higher interest rates attract foreign investment, increasing demand for the AUD, while lower rates can lead to a decrease in its value. The interest rate differential between Australia and other major economies, particularly the US, also plays a crucial role. 1. Global risk sentiment. The AUD is often viewed as a risk currency. When global markets are optimistic, investors seek out higher-yielding assets, including the AUD. Conversely, during periods of global uncertainty or risk aversion, the AUD tends to weaken as investors flock to safe haven currencies like the US dollar or the Japanese yen. 1. Political stability. Australia's political and economic stability make the AUD an attractive currency during times of global turmoil. However, domestic political events and policy changes can also impact its value. But how does the Australian dollar perform in global economic crises? To evaluate the AUD's potential as an investment, it's essential to look at its performance during past global economic crises. The global financial crisis, 2008 to 2009. During the 2008 financial crisis, the AUD experienced significant volatility. It fell sharply against the US dollar, dropping from 98 cents USD in July 2008 to a low of 60 cents USD by October of the same year. This decline was primarily driven by a collapse in global commodity prices and a flight to safety among investors. However, the AUD rebounded relatively quickly as commodity prices recovered and confidence in the global economy was restored, reaching parity with the USD in 2010. The COVID-19 pandemic, 2020. The outbreak of the COVID-19 pandemic in early 2020 sent shockwaves through global markets. The AUD, already considered a risk currency, saw a steep decline, falling to 55 cents USD in March 2020. Yet, as Australia managed to control the pandemic domestically and global commodity prices began to recover, the AUD bounced back, surpassing 75 cents USD by the end of the year. These examples illustrate that while the AUD is susceptible to global economic shocks, it has shown a remarkable ability to recover, particularly when commodity markets stabilize and global risk sentiment improves. So what are the risks and rewards of investing in the Australian dollar? Investing in the Australian dollar, like any other asset, comes with both potential rewards and inherent risks. Let's explore these in detail, starting with the rewards. 1. Commodity exposure. The AUD offers investors indirect exposure to global commodity markets. As demand for commodities like iron ore and coal increases, so too does the value of the AUD. This can be particularly rewarding during periods of strong global economic growth. 1. Interest rate differentials. Historically, Australia has had higher interest rates compared to other developed economies. This has attracted foreign capital and increased demand for the AUD. If the RBA continues to maintain relatively higher rates, the AUD could offer attractive returns for investors. 1. Political and economic stability. Australia's stable political environment and strong economy make the AUD a relatively safe currency compared to those from more volatile regions. This stability can be appealing, especially during periods of global uncertainty. 1. Diversification. For investors whose portfolios are heavily weighted in US dollars or euros, adding AUD exposure can provide valuable diversification, reducing overall risk. Moving over to the risks. 1. Commodity price volatility. While exposure to commodities can be a reward, it's also a significant risk. The Australian economy is highly dependent on commodity exports, making the AUD vulnerable to sharp declines if global demand for these resources drops. 1. Global risk sentiment. As a risk currency, the AUD is highly sensitive to changes in global risk sentiment. During times of global economic instability or market turmoil, the AUD often depreciates as investors seek out safer assets. 1. Economic shocks. Although Australia has a resilient economy, it is not immune to global economic shocks. A major downturn in key trading partners like China, or a significant drop in global commodity prices, could negatively impact the AUD. 1. Currency volatility. The AUD is known for its volatility, which can lead to significant short-term fluctuations. This volatility may not be suitable for all investors, particularly those with lower risk tolerance. Before we go over to our conclusion, how to actually invest in the Australian dollar. If you're intrigued by the potential of the Australian dollar and are considering it as an investment, there are several ways to gain exposure to the currency. 1. Forex trading. The most direct way to invest in the AUD is through the foreign exchange, Forex market. In Forex trading, you can buy and sell currency pairs, such as AUD/USD. This method requires a deep understanding of currency markets and is often used by more experienced investors. 1. Currency ETFs. Exchange-traded funds, ETFs, that track the Australian dollar are a less direct but potentially more accessible option. These ETFs hold AUD-denominated assets, providing exposure to the currency without the need to engage in Forex trading. Examples include the Invesco Currency Shares Australian Dollar Trust, FXA. 1. Australian bonds. Purchasing Australian government or corporate bonds is another way to invest in the AUD. These bonds are denominated in AUD, so if the currency appreciates, the value of these investments could increase when converted back to your home currency. 1. Australian stocks and mutual funds. Investing in Australian companies or mutual funds that hold Australian assets can also provide indirect exposure to the AUD. If the AUD strengthens, the value of these investments could rise when converted to other currencies. 1. Real estate. Investing in Australian real estate can provide exposure to the AUD and the country's economic growth. However, this method requires significant capital and is less liquid compared to other investment options. So what do you think? Is the Australian dollar a smart investment? Let me know in the comments below and subscribe if you like this format. After exploring the history, driving factors, performance during crises, and the risks and rewards of the Australian dollar, we return to our main question. Is the Australian dollar a smart investment for the future? The answer isn't straightforward. The AUD offers several attractive features, such as exposure to global commodities, potential for high returns due to interest rate differentials, and the benefits of investing in a stable and diversified economy. However, it also comes with notable risks, including its dependence on commodity prices and susceptibility to global market sentiment. For investors with a high tolerance for risk and a positive outlook on global commodity markets, the AUD could indeed be a smart investment. It offers the potential for significant returns, particularly during periods of global economic growth and rising commodity demand. However, For more conservative investors seeking a traditional safe haven asset, the AUD's volatility and risk profile might make it less appealing. Ultimately, whether the Australian dollar is the right investment for you depends on your financial goals, risk appetite, and market outlook. While it may not be the ideal choice for every investor, under the right conditions, the AUD could certainly be a smart addition to a well-diversified portfolio. So is the Australian dollar a smart investment? For those willing to embrace both the risks and the rewards, it just might be. Keep your money growing. Thanks for watching and see you next time.